On today's show, 3 questions. Number 1, which stocks are in rotation? Number 2, are dentists about to get busier? And number 3, does anyone actually understand inflation? Welcome to Dentist Money's 2 Cents, where we help dentists navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are.
What's up?
And it's just you and me, Rabih. And Rabih, you seem extra excited today for something that's happening maybe this weekend. Do you want to share with the good people what that is?
Yeah, should I flag this podcast in 2 words? White powder. No, it's the ski season. The ski season just started. You guys are the ones to blame. You converted me to become a skier, right? Ended up buying my season pass, a bunch of new gear, everything, and I'm planning to go skiing tomorrow. The ski resort opens today, but today I'm working. Tomorrow I'm heading to the slopes, and I'm so excited. We'll see how it goes.
That's amazing. I can't even believe it's ski season again, but I said this last year. We did a podcast on this of you getting up, like it was like your 4th time in your whole life, and just how like truly inspiring it was to go skiing with you. It took me back truly, like it's fun, and like talking to you about it is fun because I've skied for 30 years and I love it. It's like one of my main hobbies, but you like reinvigorated me to the point where I bought new skis this year. And for the first time in 13 years, I've skied the same skis for 13 years, but talking to you and like you getting so pumped about it and us talking about doing like our Dentist Advisor ski days and everything, I was like, you've like reignited my love of it. So,
well, I'm excited because you guys broadened my horizon and now there's something I can look forward to because the older I get, the more painful spots in my body I find. So now there's something to look forward to, a physical activity that's fun.
Okay, since we're on this, we're going to hit this really quick. For those of you that all know we all know and love Rabih. We know that he is all about the data and digging into just all the stats and
Where are you going with this?
Okay. So what Rabih decided to do, he asked me a couple weeks ago. He's like, "Man, come in here. I want to show you something." So we go and sit down at the in our little meeting room there, pulls out his computer, and he shows me this little thing he bought for, he puts it on his boot. What's it called, Rabih?
It's called Carve.
It's called Carve.
CARV.
So what it does is he puts it on his boot and it analyzes his turn angle and all sorts of things, and it feeds to an app, and he then gets on the lift, and it'll tell him how to improve in the data, and it'll track him for the whole season, all these data and metric points, which I had to share because I love that you've taken this, like you've turned it into your own thing, and I love that.
You know, I'm not gonna even be embarrassed.
You shouldn't be.
Just gonna own it. This is not an advertisement for the company. It's kind of a startup, so it's not really that popular. But they're like, hey, let's put this sensor on your boots. It calculates like 20 different measurements, and it gives them down to the percentage point. Don't you like to have some feedback? And I'm like, I'm all in. Sign me up.
Yeah.
So we'll give it a try. I'll give you an update by the end of the ski season whether I improved or not.
I love it. And then I told you maybe I might want to buy one. So okay, well, let's jump in. Rabih, number 1, which stocks are in rotation? You started off before we got on that you said just not a lot's going on right now.
Yeah, the market has been uneventful. Not a lot of data points have come in. And I think it's going to be this way until the Fed meeting in the 2nd week of December. We're not expecting to see stuff. Maybe we'll look at some retail sales for the holiday season. This might usually create the infamous December rally, but that's about it. The market is ready to call it a year. The frequency of news that we usually see isn't as high. So from now, the earnings season kind of just ended. So from now till December, you got one Fed meeting, maybe some retail data. If there are no surprises in inflation and unemployment, we're going to call it a year. Like, this is how it usually happens. People are not working. They're with family. They're with friends. They're celebrating the end of year. And the market kind of calms down. But regardless, you can always take the pulse and see what has been happening in the market. Where do we stand on different economic indicators? And what do we think are the ones that are most interesting? The one that might be making the next upcoming move, right? So in terms of stocks, really not much happened, but the week still ended up being good. So pulling up my dashboard over here, all the indices that we've been reporting on for the last 2 weeks are up. Emerging countries are up, emerging markets are up, developed markets are up. And I'm listing them from the least up till the most up. So 0.3 for emerging, 0.8 for developed. This is for the week. And then you've got the Nasdaq, S&P, and Dow Jones. Nasdaq at the lower end of 1.46%, and Dow Jones at the higher end of 1.8%. And then skyrocketing everything, you've got gold up 3.88%, and this is more of like recovering from the sell-off that it had during the Trump trade. But the outlier of them all was small cap, and small cap is up 4% for this week, which is big. And the market overall is up, but a lot of the articles this week were talking about a rotation, and they are saying that institutional money managers, in a sense, are rebalancing their portfolio, and they're trimming a little bit of their large cap Max 7 exposure, and they are giving it away and diversifying their portfolios again, investing in small cap stocks, because the perspective going forward is that we're going to be in a pro-growth environment, and it's going to lift all companies, not just the largest companies in the economy. And this is great. And I think this reminds us of a lot of worry when those Mag 7 were the only thing that's driving the market a couple of months ago. And we used to say, is this normal? Is this how it's supposed to be? And this is the continuation of it. A couple of stocks drive the market to an all-time high. And then there's a recalibration position where the rest of the companies catch up. And this is what we are seeing right now. Some people might want to overanalyze it, try to become day traders, and try to switch from the large cap to the small cap to try to catch the wave, increasing their margin of error. But on a global sense, the markets are still up. Let me see. S&P 500, 25% for the year, Nasdaq 23.2%, and Dow Jones is up around 17.5% for the year. So in a sense, we had the initial push, the initial momentum, reaching new levels, and now the market is making catch up and reducing that concentrated risk, which is all good, all nice, and you just have to sit and look at it happening. You don't really have to go in and make any changes. I have some economic data I'd want to share, but do you have any comments about the market first?
Well, no, I was just thinking, Rabih, when you were going through that and saying like all the talk around the Mag 7, and I was thinking of the famous John Templeton quote, weird, got a quote, but the famous John Templeton quote when he said, the four most dangerous words in investing are "this time it's different," right? And it's again, I want to emphasize that, because whether we're talking about a market downturn or we're talking about this, what feels like this crazy situation where these 7 stocks are driving everything, things tend to go through cycles and things tend to normalize, which is what we're seeing now. And even as you're saying, the quote unquote smart money, the institutional investors know that as well, which is why they're trimming and relocating their assets to small cap, which, by the way, just for what it's worth, we love that as Dentist Advisors, because we have tilts towards small cap and towards value. We believe in that over the long term. So yeah, that's the only thing I was thinking about, is just these first principle thoughts around it's not different. The market may be different in certain situations, but humans never change. And that's what makes the market and these cycles kind of stay consistent.
Yep, 100%. So I think the risk over here from a behavioral perspective is things are going as they are supposed to, but it's boring and people feel that they have to do something. And actually you'll see it. Like the fact that Bitcoin just hit 99 grand overnight, right? And the fact that...
Did it hit 99?
Yeah, during Asia trading hours, and then it reverted back. And then the fact that, there are hype about other crypto companies like MicroStrategy, etc. It's going to make more headlines.
Are we back to this, Rabih?
So but regardless of all of that, this just tells you that sometimes when the wheel is turning, and if it's not broken, to not try to fix it, people will get bored and they'll start to dabble in other stuff. And this is as big of a fault as people who try to freak out and try to sell when a sell-off happens. It's a double-ended sword, and this is the behavioral challenge of investing, where even in good times you have to stick course, not just in bad times. And yeah, some people might do something that exposes them to more risk than they would want, and position them in a place where it's not ready for the next risks that show up.
Well, that's such a good point, Rabih. We talk about this all the time, right? Long-term success in investing is about your temperament, not your tactics. It's about your psychology, not your strategy. Like, it's about how you are approaching this from an emotional standpoint, and can you build rules around yourself? Again, this all sounds boring and repetitive a lot of times, but it's because it is. It is boring and repetitive. Like, it should be really boring. If you're super, super jacked up and excited about your investment strategy, unless your name is Rabih Damachki, like, you're probably doing something. You're probably going down a road of destruction, I would guess.
Probably.
It's probably a good general thought or rule to have.
All right. Not talking about the destruction, but talking about indicators that I am looking at. Because if we think there's going to be a change that is not a surprise change, we're not talking about stuff that we didn't anticipate, but stuff that are heading in a direction that we would want to keep an eye on, I can think of two things that we would want to look at. One is related to the unemployment, and the other is related to the yield curve. So I'm going to start with the yield curve. We know it's been inverted for over 700 days. We're talking between the 10-month, 10-year, and 3-month rates.
Was that a record?
It is a record. It is the longest it's ever been inverted. And the 10 to 2 uninverted like a couple of months ago, but no one pays attention to the 10 to 2 anymore. So the 10 years to 3 months is still inverted, but we are so close to ending that inversion. The inversion right now, and what I mean by inversion, the 3-month treasury yield is higher than the 10-year treasury bond yield. And it is only higher by 12.3 basis points. So 0.12%.
Basically flat.
It's basically, we're so close. So when the Federal Reserve cuts rates in December or later on in January, hoping that the market fully reflects those. Because right now for December, they're pricing in a 65% cut, 65% probability of a 25 basis point cut. Most probably it's in the pocket given what the Fed has communicated, but it's not reflected in the Fed funds rate. So once these start getting reflected, the uninversion, the long-awaited uninversion to the 3-month to the 10-year is there. And how will the market react? Will now because banks change their lending strategies, etc., based on the shape of the yield curve. So what effect will that have on the financial markets, especially the lending market? That would be very interesting to look at. You will have an upward sloping yield curve on all maturities, which requires different investment strategies in the bond market than those when there is an inversion in a certain part and an upward slope in another part. So
is it safe to say, Rabih, that a normal sloping, upward sloping yield curve tends to be an indication of a pro-growth environment?
Yes, but you don't want it to be too upward sloping and not too flat. You don't want it to be inverted in a sense, because but you would want it to be upward sloping, but if that is too steep, that might create some worries. So, the target is usually I'm going off a tangent here, a little bit technical, but usually it depends on what monetary policy is set at. If monetary policy is set at, we want to have 2% inflation on target. We want the GDP to grow at 2.5% every single year. The increase from one year to another across the maturities in the yield curve should reflect these expectations. If it's higher, if it's a worry, and if it's lower than these expectations, it's a worry. So a slightly upward sloping yield curve that reflects what we want the economy and inflation to be at.
Moderate is the word there. Okay. Moderate. Makes sense.
The second thing that's still interesting to look at, and we've looked at this for a long time, it's the difference between the unemployment level and how many job openings we have in the economy. So how many jobs are there for each employed person? And we know that at one point it was like 2 jobs per person, and
it's like 12 million open jobs, and like 6 million people looking. Yeah,
exactly. So a big indicator whether the labor market is in equilibrium or not, and whether the labor market might be contributing to inflationary pressure in the economy or indicating recessionary environments in the economy, is how much it is in balance. And I got the latest readings. They are for September. October data only came in for the unemployment level, but it looks like it's going flat. Right now, based on September data, the unemployment level in the US is 6.834 million. That's how many people are unemployed in the economy. And the number of job openings available is 7.443 million jobs. So we are there. We are we are less than a million away for that perfect balance. But just because there are people with different skill sets that don't fit in new
It's
industry,
never going to be perfect there. Yeah.
job openings that are just there on websites, but they're not really job open. Like there are so many. The devil is in the detail over there. The fact that they are close enough to each other, and it looks like 1.03 or 1.04 jobs per person, tells us that the job market is in balance. But the trend of these two lines have been at an intersection. So will they stay hovering around each other, or will one cross in either direction? And in this case, will we have more unemployed people than job openings in the next coming of months, given that monetary policy is still restrictive according to Fed officials? We will see. But that is the other thing what we would be looking at, because that would be market moving. But other than that, dude, don't look at the market and enjoy a vacation once in a while.
We should have signed off with that. We should just end it here. Don't look at the market and enjoy vacation once in a while. I love that. Awesome. Rabih, anything else on that, markets or economy?
Nope. Until next week.
Great. Till next week. We'll leave a little teaser there, a little Thanksgiving special next week.
Oh, yeah.
I think we're going to do the same thing. Maybe we'll tease a little, go through some Thanksgiving foods or something and have you critique.
Oh, yeah. I have a lot to talk about.
Perfect. Okay. Next thing we wanted to talk about, our dentists about to get busier. So we actually had one of our advisors, we had Will, shoot this over to our advisor thread. This was an article in CNBC that's titled "Dental Supply Stock Surges on RFK's Anti-Fluoride Stance, Activist Involvement." So for those of you who have been living under a rock, we have Donald Trump, who won the presidency, and one of his main kind of things he talked about. By the way, are we talking about Trump too much? It's like the third week in a row. Maybe we're talking about the president. We're getting too political. I think we're making people nervous.
It's just that there are no new news.
Yeah,
that's why.
Yeah, that's why. Things have really calmed down since the election. So we're really grasping here at straws here. Okay, but one of the main things was Robert F. Kennedy Jr. Trump's been signaling this the whole time that he was going to have RFK kind of lead this, what he's calling "Make America Healthy Again" movement, right? We're not taking, again, any stance on this whatsoever. We're just, reporting what Trump has done and said, and he has not come off that, right? So he's having RFK lead this movement, and one of the things that he is the pick for the Secretary of Health and Human Services, and so he's followed suit with what he was talking about in this campaign. What was interesting is after this announcement, Henry Schein, the company Henry Schein, the biggest dental supplier in the country, jumped on one day by 7.5%, which I thought was interesting. And if you look into this, it's all because RFK has talked a lot about advising the U.S. water system to remove fluoride from public water. So I don't know the ins and outs of his stance on this in particular, of why he's anti-fluoride. I'm sure there's the reasons behind it, but he's pretty anti-fluoride in the water. And so Henry Schein jumped literally almost 8% in a day, I guess on the theory that dentists will be busier and they'll need more supplies. Hygiene will be busier, more supplies because of fluoride. And I think it's kind of proven track record to minimize cavities and improve dental health. So I thought that was interesting. Rabih, what are your thoughts on this? Are dentists about to get busier?
They might get busier, but actually I'm not aware of that company. So I was just searching it as you were speaking, and I wanted to look at like the year-to-date performance and see whether it is in line in the market. Surprisingly, for this whole year, it's kind of flat. It's only down 1% for the whole year, which is tells you that it's completely uncorrelated. It has its own stuff going on. Yeah. But another headline that showed up that says from Yahoo Finance says, HSIC stock likely to gain from its latest acquisition of Ascendis. So they are, which is a national medical supplier that specializes in delivering continuous glucose monitors. So there are fundamental stuff that are business related, and there are also, the political risk segment to it. I'm not surprised that if there is a new regulation to the dental industries related to fluoride, you would have a price impact on the stock. I was surprised that it's 7%. That's why I went and looked.
Yeah.
The other portion, yes, they are acquiring another company, but usually when a company acquires another company, the stock price goes down because they have to deal with a lot of filtering through and trying to create synergies before the stock price goes up. But it seems like the market is taking it lightly. In my opinion, I think there's definitely going to be impacts, but they're going to be company specific impacts. Will it be an industry wide a medical phenomenon where suddenly a whole industry is doing well because we've got a new secretary for health that has different opposing views? I don't think so, because all these companies do not have the same strategy. All these companies are competitors with one another, and some will gain and some will lose. This is the rhetoric I would follow. So yes, there's going to be impact, and there's going to be an impact on the electric vehicle market, and there's going to be an impact on tech, and they're continually pending court cases with Google and Alphabet and antitrust. There's going to be company specific impacts due to changes in regulations, but this doesn't mean the whole industry is going to be affected, simply because the participants of these industries are competitors, unless we just wake up and we figure out there's a total collusion across all industries. But I don't think that's the case.
Some people are out there saying there is, yeah.
So the whole idea is, yes, there's going to be changes. Those are risks that you can diversify away, and you really don't get rewarded for taking them on. So from a portfolio manager's hat on perspective, don't be too granular in putting your neck out on a line on a certain stock, but maybe on an industry, and that would solve the problem.
Yeah, no, I love that you just said that. And one of the ways we talk about of helping dentists navigate the noise of the markets is this is a perfect example. This is nothing more than a fun story used for the dinner table fodder. Just talking about it, it's interesting, but to make this a strategy that you're thinking you're going to outguess what even an industry is going to do, Rabih, right? Even an industry, even a sector, to be able to think you're going to do that with any level of precision is just inaccurate. It's just not going to work, and again, it's going to lead to a disastrous outcome in most cases. I do think it's interesting. Just the last comment on this, that this is obviously creating a battle. There's this Don Bilson, Gordon Hackett's head of event-driven research. He says, exact quote, "This will in turn lead to an acceleration of tooth decay and more dental visits."
If you don't get fluoride,
meaning the fluoride getting pulled out of water. So maybe maybe the whole dental industry is rooting for this. Maybe if you're out there listening, it's like, yeah, go do this. Who knows? I don't know. Okay, we wanted to hit that. Well, last thing here, wanted to move on to inflation. Does anyone actually understand inflation or how it works, Rabih? We talked about inflation a lot, but we had a situation happen this last week that we thought was a good reminder to hit this again and maybe do a bit of a deep dive into kind of showing how people just don't understand inflation or the numbers. So and just have some fun with this as well. So we'll just say a friend of the show posted something on social media, and I'll read it. I'll read what was posted, and it went viral. I don't know the true definition of viral. We'll have to look this up. Maybe we should look this up.
Well, I think if you usually get 200 views on average, but suddenly you get 70,000 views, that went viral. Right?
Okay.
There's a jump.
Let's see what this says, though. I'm just going to look up what old Google says. Going viral is an idiom that means something that has spread quickly and become very popular or well known through the internet, email, or other media, for example, a video. Okay, so it just means it goes, yeah. And I think you're right. Like a regular page that doesn't get much all of a sudden goes crazy and like 50x's their viewership. That's viral. So we're going to stick with it went viral, and I'll let the people decide. So this was posted a few days ago, earlier this week, and I'll read it. It says inflation spiked to 9.1% in 2022. It's now down to 2.6 as of October. Huge progress in the last 2 years. So I want to get your thoughts on that, but I'll give you really some quick stats. This is from a normal page, from not a like viral person, right? Influencer of any kind. And it went it had within 2 days, almost 70,000 views, almost 3,000 likes, and over 800 comments. And so I'd say that's pretty viral.
I should be tweeting more.
Yeah. Okay. So a couple of takeaways. I think the main takeaway from the comments, and we'll read some because some of them are pretty funny. But before we get into this, Rabih, when you see that, I'm going to read it again. Inflation spiked to 9.1% in 2022. It's now down to 2.6 as of October. Huge progress in the last 2 years. What is your response? What is your initial thought or response to that?
If you understand what inflation is, that is an accurate statement.
Boom.
Yeah.
Easy enough. Easy enough. Here's what I can tell you. A lot of people don't understand what inflation is. Okay. So here are some common kind of misconceptions. Number one is that there was America does a few things very, very well. One of them is we make everything political. So if you go through these 800 comments, 75% of them are all political, Trump this, Biden that, blah, blah, blah. But one of the biggest misconceptions is that the president alone controls inflation. Do you want to speak to that at all, Rabih, of that misconception, or just your thoughts on that?
Yes, there are multiple theories that try to squeeze out what inflation is. And in a sense, inflation is related to the overall change in the price level. So the change in the price level. The most prominent of these theories is that it is related to the money supply in the economy. And who controls the supply of the money? Two authorities. You've got the fiscal government, which is how much the government creates, prints money, and distributes money. And then the Federal Reserve, that's monetary policy. It's related to how much they decide to buy and sell bonds and how much they want to put interest rate at. These two in tandem, whether they are working with each other in one direction, up or down, or against each other, will have an impact on inflation, which is the change in the price level. So, and these two, fiscal policy and monetary policy, usually do not try to micromanage how the price level is changing, but more of come in as an interventionist approach, reactionary approach to factors external to the economy that force the economy to trend in a certain direction. So global pandemics, supply chain disruptions, wars, or lack of global innovation, and multiple recessions across the world, or a climate crisis, all of these create headwinds to an economy that might drift it off its course and either put it on a path where the price level might be changing, or the productivity might be changing, and that would be a recession. So it tilts you either way. Monetary policy and fiscal policy come in as a reactionary impact, and their action itself has an impact on the change in price levels. I tried to say not inflation as much as I can, so people
It was really good. It was really good.
Explain inflation with inflation, but
yeah.
I'm trying my best.
That was awesome. All I heard there was it is far more complex than people want to give credit to, and they want to just be able to point at one thing, or in this case, get political. And that has been proven out in some of these comments. I'll just kind of, first of all, that was an amazing explanation, just saying this is, again, a multifaceted, super complex system. And to say that one person in office versus another is going to be the main reason any of this happens, probably just
sure. No single president should take credit or blame for economic phenomena that form in and outside their terms.
Yeah,
it's we've mentioned this before, but it's bigger than inflation and recessions and macroeconomic trends that last 10 and 15 years, where a presidential term at best is 8 years. Just tell you that those stuff are bigger than one single person.
Well, just to prove that people don't totally believe that, or that they think different, I'll just give you a couple of comments here under this, again, in this theme of things being political. Thanks, Joe, was one comment. Go Trump was another. And in 4 years' time, Democrats are going to have to clean up yet another Republican mess. I guarantee you, Trump is going to run this country into the ground. These are all comments underneath this post, this factual post about inflation. And then let's see, when Trump left in 2020, the inflation rate was 1.2. Biden jacked it up to 4.7 in 2021, 8% in 2022, 4.1% in 2023. Hello, that's 16% in 3 years. And that's close to 20% inflation under Bidenomics. 20% inflation. Do you have any comments on that?
I'm not sure of how accurate the numbers are, but the idea, if you exclude a lot of stuff and you look at only one data point, the people who are supporting the Republicans are right, and the people who are supporting the Democrats are right. It's just that, what are you looking at? Are you looking at the big picture, taking into consideration all the numbers, or are you trying to cherry pick a data point that actually fills in your personal narrative, right? It is true, inflation was around 2.1% when Trump took over, and then but throughout the whole time, even 2019, inflation was starting to pick up. It was just due to global economic factors. And then COVID happened, the first stimulus check came up, and inflation was showing up there simply because of the disruptions that the pandemic has caused. So throughout the Trump term, there was a meaningful change from inflation. It was moving from being not there, 1.7%, to like 4. That is like 4 folds, right? And then when Biden took over, more stimulus checks were distributed, right? And then monetary policy, which was aggressive in terms of, here's what people are not getting. We expanded, we think in 2008 that the Federal Reserve went too big. It went 3 times larger in COVID 2020 in terms of its monetary impact, in terms of how much it increased the money circulating in the economy. And that is bigger contributor to inflation than the stimulus checks. So also under Biden, and it reached its highest in July of 2022 at 9.1% looking at the CPI. So the numbers are correct, but are you going to only look at a 3-month period and attribute it to a certain president, or are you going to look at the whole point? And these were just numbers, but the way I think of it, and this is my personal opinion, so take it with a grain of salt, but I've told you this, Matt, a long time ago. At that point in time, when you had a pandemic happening of a new disease that you do not know what impact it's gonna what the impact of it is going to be, at that point in time, knowing that you will not know how the future will pan out, would you rather just go all in and deal with the repercussions later, or come in short and maybe try to fix it? Like it's imagine as if like a family member got in a terrible car accident, and the doctors are telling you, you know, we can go this route. It's a new way to figure stuff out. This might bankrupt you. Do you still want to do it in the hopes of saving that person's life? Or are you willing to just say, you know what, I can only afford medical expenses up to a certain number. Just do that and I'll deal with the guilt later on. The US decided to choose to go all in and then deal with the repercussions. And this was more of not a single president's decision, but every single policymaker in the US who acted on an agenda to try to bring the country out of a pandemic. And then inflation came up and they had to deal with it. Politics comes in the way. Some people want to win points over others, but that wasn't the big picture. This is my personal opinion, but this just makes me not care about who the president is and what is happening, and just let's move forward in a sense of how we get better.
Yeah, no, I mean, how dare you use nuance and fact, Rabih? How dare you in this political environment? No, I mean, you're totally right. I mean, to that point, everything looking forward is always a mystery. Looking back, it's scientific. Like we can look back and be like, oh, we should have done this, that, or the other, knowing what happened, but we failed to realize what was going on at the time, being super scary, super unknown, a lot of moving pieces. And so I'm with you. And again, that's why I wanted to bring up this post, because again, when you read the post, it's rather innocuous and quite accurate. The numbers are the numbers, but I think it highlighted perfectly, again, these misconceptions that people have. The other thing I was thinking about when you were going through that, Rabih, is that like every single event in your life or in the world has like what I'd call like its own family tree, right? The event has parents, the event has children, the event has cousins, meaning it just has all these different connections and ramifications that it causes. And when you're going through this and saying, we just want to look at this thing in a 3-month vacuum, it's like, well, you can't really do that because that event came from another event that came from another event that had a ripple effect from something else. We don't do that anymore, it seems like nowadays, and especially like online. We just want to like shout at the rooftops at like one thing or one person. But that's why hopefully this is helpful to kind of go through this inflation narrative and help people kind of understand the nuance here. The other couple other main misconceptions we don't have to go through in great detail, but that we noticed from this, another one being that inflation does not equal current prices.
Correct.
Right? Like when we're reading like this tweet says inflation spiked to 9.1 is now down to 2.6. We're not saying prices came back down. We're saying the price change is now back to a controllable number. What do you say about that, Rabih?
Yeah. I'm gonna bring physics into this. I hope this is gonna be
Please
helpful.
Please do.
Okay.
Yes.
There is a relationship between the price level and inflation. Inflation is the change in the price level. So let's talk geography. Let's take a well-known city. Let's take LA, right? You can be in Hollywood, you can be in downtown LA, you can be on Santa Monica Beach, right? Let's say the preferred position, which is equivalent to the price level. The preferred position for you is to be at the beach. You don't want to be stuck in the traffic, right? Your preferred position is to be at the beach. That is the price level. You want to be at the beach, aka eggs are $2. You don't want to be in downtown where eggs are $5. This is as simple as that. Inflation is your speed in the car while you are driving from the beach to Hollywood. It's not. It's the speed at which you are getting somewhere. So if you are at the beach and you're gonna end up in Hollywood, aka you are in a healthy economy and you're gonna end up where their prices of eggs are high. Inflation is how fast are you driving there? Inflation is how fast is the price of egg going from the $2 to the $5? What is the speedometer in your car saying when you are in Santa Monica and you're trying to get to Hollywood? What we are saying when we say inflation has gone down, it means that you are not driving 80 in a 40 speed limit zone anymore. Your speed driving from Santa Monica to Hollywood is not 9.1% like it was. It dropped to 2.7%. I hope this analogy makes sense. It is the change in the price level. Now you tell me, well, I am now in Hollywood and I don't want to be in Hollywood. Eggs are too expensive. Well, you would just hope that other economic indicators change, aka you make so much money that living in Hollywood doesn't bother you anymore.
Yeah, I was going to say
that is the whole point.
Yeah, that is a fantastic analogy. I love the beach, and I love Southern California. Yeah, now I want to go to the beach. No, I love that. This was a huge misconception. Another misconception that I noticed in these comments was that people think inflation is measured. They thought this figure was a per month figure. So a lot of comments around, well, 2.6 per month versus no, this is an annualized figure. That was a huge misconception. I saw many comments. Any thoughts on that, Rabih?
Yeah, this is the problem with the data. You can look at it completely differently. Let me tell you what we collect and then how we analyze it. What we collect is that this month eggs were $2 and then next month they are $3. This is a $1 change number wise. This $1 change from month to month means that eggs increased 50% in a month, which if you multiply it by 12 is 600% increase, right? So, or what you can do is you can look at the price of eggs now, which let's say November 2024, and then in November 2025, a year from now, you look at the change, and let's say they were $2, and then let's say they were $2 and they became $4. That is using data that is 12 months apart, and the number you're picking out, which is 100% increase, is an annualized 100%, which you divide it by 12, and then you'll get the monthly change. So the confusing part in the economy is that we have both types of data. We have data that we can measure every single month, and we have data that we have waited a certain period of time to look at it. And this just makes it more complex, but this just tells you, is the increase increasing or is the increase decreasing? So it just gets to another level, which is not your speed between Santa Monica and Hollywood, but at the rate at which your speed is changing between these two. Are you pumping the brakes or are you pressing more on the accelerator? So it just gets there. And honestly, we did not live in a world that had that much data 30 years ago. So we still get these data and we fumble and worry about how we try to analyze them and how we want to look at them. But thankfully, we've got experts and they look at them at all these different time frames. And you need, a more rational, calm conversation to discuss the numbers rather than a thread.
Yeah,
that's not the place to have such a mathematically intensive conversation.
It's not fun though, Rabih. It's not entertaining.
A podcast, maybe.
Podcast, maybe. The last thing I noticed, another theme and major misconception. This was uncomfortably pervasive in the comments and just showed a major lack of understanding of what is the answer here. Tons of people calling for deflation and saying we need deflation, we need prices to go back to where they were. Just that was maybe the most egregious misconception that I saw of just like you just don't understand how this works. Do you want to speak to that, Rabih, of why deflation is just not the answer?
Yeah,
and it's just not going to happen.
Yeah, I'm gonna appeal to your emotions right now.
Please do. Remember, we're going physics and then we're going therapist. I like this.
Do you remember how sad it felt during COVID and how sad it felt during 2008? I'm not gonna go ask your grandparents how sad they felt during the Great Depression. These are moments when we see deflation. This is what we don't get. Going back to cars, it's not that we are parked in a parking lot. We are always moving on a highway. This is how the economy is. So the idea when you say deflation, it means that you decided to put your car in reverse while you are on a highway. No, the idea is that you are on a highway, you want to keep driving at the speed limit. Driving too fast, that's inflationary and that's scary. But driving too slow might be, it might cause traffic and people will be frustrated. But putting it in reverse, that's disastrous. So what you want is that you want to keep the flow to keep moving, but you don't want it to be moving too fast where there are risks. But you also don't want it to be too slow because then the economy is not going to be working for everyone. The whole point of having a road and a highway is to get to where you want to be. And if you're going too slow, you're not going to go there. Having deflation, which is just putting your car in reverse, just crumbles the system. That's why recessions are scary. And when 2008 happened, suddenly you've got Occupy Wall Street, right? Because people start questioning the fundamentals of the system itself. What you want is inflation that is on your target, which is driving on a highway at a speed that is safe for all, gets everyone there, everyone benefits because they get to where they want to go to. That's the whole idea. In developed countries, it is around 2% because it kind of matches the real growth in GDP. And we've discussed this before. You need the incentive, and this is what causes the incentive. If the economy is not growing, prices are not increasing, you tend to withhold consumption. If you know that cars are not going to be expensive next year, you'll just delay yourself a year before buying a car. But the economy depends on consumption. It's better to consume now than later for the economy, not for your net worth growth. And you need a little bit of inflation just to incentivize people to keep spending, to incentivize the highway to act as a highway and get people to where they need to go.
Hey, Rabih.
Yeah.
You're locked in today, dude. You are locked in. These analogies are perfect.
Great. Love it.
Are you still on painkillers or are you off the painkillers?
Actually, yesterday was the first, although there's still pain. This has been hell. I'd rather deal with an OA than wisdom tooth again. But this is the second day without painkillers. Yeah.
Okay. For those of you that don't know what we're talking about, Rabih got his wisdom teeth out last week. This is the first day. So this actually makes sense. You got a dry socket. It was a really rough week or so. This actually makes a lot of sense, Rabih, because you got another level that you're locked in at. And I actually am. So when you get sick, and you're sick for like 4 or 5 days or whatever, and then you come back and you're healthy, that first day being healthy, and you feel like you are 10,000% better than you've ever felt in your whole life. I feel like that's kind of where you're at. It's like you're off the painkillers officially. You're just handing out analogies like Halloween candy, like
Well, I'm glad
king-size analogies.
I've been, feeling some frustration laying in bed, not feeling productive. So I'm giving it my all on the court right now.
You're locked in. The people appreciate it. So, okay. Well, thank you for going through that. I think that's hopefully super helpful for people to do a kind of a deep dive. We thought this was a good opportunity to do that deep dive on inflation with this thing that went viral. And that's why I wanted to talk about it. It's 70,000 views and almost 1,000 comments. I was like, holy cow, this is like clearly
70,000 people who do not know what inflation is.
Yeah.
Regardless
honestly,
of which side they took, right?
Well, I think this is a big enough group of people. And I went through almost every comment and I was like, holy cow, almost like 5 to 1, I would say, of just people with just the most just misunderstanding of inflation. Now, I want to finish with this. We want to be empathetic to the fact and acknowledge the fact that real prices are up. We're not saying that and they've stuck. So we're acknowledging that. And that has led to some real frustration. And I think look no further. I think if you wanted to boil it down to one thing, if you had to point to one theme of why the incumbent was voted out this year, we talked about this. Globally, this is actually happening. I could think you could point to inflation or you could point to prices being up, not necessarily inflation. Because inflation, that pace, right? You're saying the speed on the highway has slowed. That's a fact. But we still want to acknowledge, if anyone's out there yelling at us right now in their car, we want to acknowledge that prices are up and it is frustrating. We're all feeling it. The answer is not deflation. Rabih, I think you can agree with this. One of the main answers here is, can we get real wages to go up? Can we get income to go up? That's how and that's kind of the idea behind this highway analogy. Inflation goes up, wages go up. Inflation kind of moves things forward. That's what we need. It's above my pay grade to figure out how.
If you've got traffic, you need a bigger highway.
Exactly. So, Rabih, this was awesome. One of my favorite shows, post painkiller, Rabih, post wisdom teeth. You're lighter with less teeth.
I'm glad, yeah.
You're just killing it.
Like a pound.
Yeah.
I don't think it's from the teeth because I just ate. But
yeah. Well, Rabih, thanks for being here. If you are listening and you're enjoying the show, do us a favor, go give us a rating, leave a comment. If you're listening on Spotify, share the show. We want to get the word out. If you think this is valuable, we would love for you to do that. Also, we have the Dentist Money Summit coming up again in summer 2025. We want to plug that, dentistmoneysummit.com. Check it out. And if you want to talk to us, if you want to talk to anyone at Dentist Advisors and share your story, we'd love to talk to you. Dentistadvisors.com. Click on the yellow book free consultation button. We have friendly advisors just waiting by their phone to talk to you. We would love to chat with you if you want to share anything, if we can help you out. So Rabih, thank you so much for being here, sharing your infinite wisdom. Everyone, thank you so much for listening. That was our 2 cents. Until next time, have a good weekend. Bye-bye.